There is $18 million traded on the dark pools here. $18 million on the trade. Okay? So a dark pool trade, two dark pool trades go through for $18 million at a price of $8.70 and $8.71, which is the price point here, $8.70 and $8.71. Based on this chart, is that more likely to be are you more likely to be a seller or a buyer? Put in your orders now. At this price, just at this price, Jack, are you more likely to be a seller or a buyer for the swing? Well, here's the point we were making earlier. Is the price lower or higher than it was before? Well, the price is significantly lower than it was before. So what is at lower prices? What is at lower prices? Well, in a normal world, as the price drops down, the idea is that demand should be rising, right? So demand should be rising at lower prices. So if demand's rising at lower prices, then of course what we would expect to see is that the only person that's willing to do this trade is a seller. The person that's willing to do the trade because it's at lower prices is the market maker buyer because it's lower prices. So therefore, when I see a block trade at lower prices, my first thought is this market is going to be a big sell-off. Agreed? This market's going to be a big sell-off. So when I see a block trade of $18 million coming in at lower prices, I automatically think sell. The same way as when I saw that big ZF contract print, I automatically think lower prices. So when you look at the trade, this is the trade that we've just taken a screenshot of. It's at $8.71. It's obviously this initial trade outcome here. And what happened was this happened. The price absolutely got crushed. It went from $8.71 to $6.40 yesterday. Yesterday, guys. It was a block trade that went through the dark pools from yesterday. $8.70 down to $6.40. So if this guy did an $18 million trade, right? $18 million. The guy made $6 million on that short position. The guy that bought it from them made a $6 million loss on that position. But you can see how important it is to recognize that if these block trades take place at lower prices, they're nearly always selling. If these block trades take place at higher prices, they're nearly always buying. And that's what we try and put into our pictures, isn't it? That's what we try and understand as traders. It's incredible, isn't it, when you think about it? Now, obviously, the downside of dark pools is you don't get them basically given to you in real time unless you are a member of that dark pool. Then, of course, you're not getting these trades in real time. You're getting them maybe about half an hour later, 20 minutes later. And as a result, you know, one of the things that happened was, you know, the idea behind one of the things that happened, of course, was that you don't know what the deal is. But you do know what the deal is. You do know what the deal is. No, it was it the deal might have happened when the price was getting traded the day before, and that's why they got such a ridiculously low price. But the timing of the dark pool came out at 9:31, 9:32 at the open. So it actually was at $8.70 when the dark pool trade got taken, and that's why it's been posted at 8.70. But it might have been actually traded the day before, or the overnight session, or the pre-market, or something like that. But when it's reported, of course, that's when it's been reported. That's why we only find out from all the various dark pools of the world. We only find out when it finally actually hits the New York Stock Exchange, and the trade becomes visible to everybody at that stage. Then, of course, we now get to see what the trade was. Now, obviously, if the trade is still hanging about in an area, it gives you an opportunity. That's why the CME block prints are actually quite useful, because you're getting them in real time, Jack. You're getting the CME block prints in real time, and you're able to make decisions based on those as it happens. And that gives you an edge, because you can start to see where those trades actually start appearing from. You can start doing some business around those block trades if you wish. And if you look back now at that ZF contract that we just talked about, if you look back at the ZF that we just chatted about, and we're saying, when we looked at what happened to the ZF, when that trade got printed by the CME, the price hung about here for about 10 minutes. The price hung about this area for about 10 minutes before breaking south, and it gave you all a chance to maybe join in with that bit of business if that's what you were kind of looking for. And you can see that sell-off gave you some real nice gains. This is a ZF contract, for God's sake. Now you might say, I don't trade the ZF. Yeah, but it's a bond trade. It doesn't matter that it's a ZF, it's a treasury trade. So it's going to be a sell on the UB contract as well. So the potential to get into that UB sell is quite high. You can join in. Massive outcomes, massive profits. Well, the dark pool operators, Simon, the bank who transacts the dark pool transaction, because the dark pool is organized by individual banks and individual dark pool holders. So, Deutsche Bank's got its own dark pool, Citigroup's got its own dark pool, Bank of America it's got its own dark pool. So, the dark pool will then report through to the New York Stock Exchange as is required. I mean, they've got to report it. They can't hide the trade. They've got to report it, but they've got certain limits about how long they've got to be able to report it, and that's what we start looking for. But block trades are different. Block trades are just off exchange, and as soon as a block trade is completed, they've got to report that block trade, Simon, right? So it's different. So in other words, if I wanted to do a deal with yourself on US Treasuries, and I wanted to buy 5,000 and you wanted to sell me 5,000, we agreed a price, then of course that deal we can do on the telephone. We've agreed a price, we can transact that deal on the telephone and report it to CME as soon as the transaction is completed, the block trade is completed. Then we report the block trade being into the CME, and it shows up on the block trade alerts at that point. Yeah, but the dark pool is different. If I do a dark pool trade, for example, in the overnight session, I could do a trade, for example, at the end of the day on Apple shares, for example, for $1 billion, and nobody's going to know about it until potentially some way during the cash open. And that's what you kind of start to see. Well, when you say is there a dark pool in every market, if I went into a dark pool, and I said I wanted to buy 5 million shares on Virgin Galactic, it's up to somebody else to say yes or no. I mean, it's a share exchange. It's not a futures thing. If I did a trade that's a futures quoted product like the CME, then of course I need to do that trade on basically as a block trade and report it. It's an exchange traded product in that sense. And that's what we're looking for. We're looking, because these are exchange traded products, you can obviously watch for trades coming through. For example, there's a WTI financial futures for 20 contracts just went through a short while ago at $67.50, but it's only 20 lots. It's not the kind of trade that's going to get your pulse racing or anything like that. But people do block trades bank to bank for small amounts. I could do a bank to bank transaction on WTI right now and say, right, I want to buy 10 contracts, and I could agree with another bank to do 10 contracts. It's not done on exchange. It's just done between me and a bank somewhere, another bank somewhere. But that's got to be reported. Because it's not on exchange, I've got to still put it through the exchange. Literally the second that trade transacts, I've got to put it on the exchange. But it's not done in terms of the likes of your order flow. It doesn't show up on your trading view screens. It doesn't show up on your order flow on your prints. You know what I mean? We're just getting the numbers coming out just now, by the way, guys. We've been sitting patiently waiting for the bonds. Remember, we were looking at buying bonds off the bottom edges at 14s. The bond price has risen, by the way, to 23, so that's a nice outcome if you held on through the GDP numbers. The GDP numbers missed expectations, and the unemployment claims missed expectations as well. The numbers are small, though. The preliminary GDP was 6.5, and it has risen to 6.6. So it has actually improved. It just didn't improve by as much as the forecast at 6.7. And the unemployment claims was 348. It did increase to 353. So kind of mixed numbers, guys. One was better than prior, one was worse than prior. Both missed the expectations. The dollar's done not very much. The dollar's had a little bit of a buy side or sell side reverse. So the buyers coming back in on the numbers there. You can see the euro's caught a bid. The pound's caught a bid against those numbers. And the dollar's gone, the bond has gone up a little bit. The bond has gone up a little bit from that outcome. So nothing for me at the moment, guys.